welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the Small Cap Growth Conference. Our next presentation is from Atlas Salt. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Nolan Peterson. He's the Chief Executive Officer of Atlas Salt, which trades on the OTCQX Best Market under the symbol SALQF and on the TSXV under the symbol SALT, or SALT. Welcome, Nolan.
Thank you, John, and thanks everybody for joining me today. So I'll just get right into it. A bit about myself before we get started. I am the CEO of Atlas Salt. I joined the company in June of last year. I come from an engineering background, but I also have an MBA and a CFA, so a strong financial background. And we are developing the Great Atlantic Salt Project. This is on the west coast of Newfoundland. It is sodium chloride, NaCl, the same type of salt you would put onto your food, but at a different purity level. And our salt is primarily produced to target the de-icing road salt market in the Northeast US, the Midwest, Ontario, Quebec, and the Atlantic provinces. This is a market that is road safety, it's infrastructure security, it's liability, it's sales to governments, cities, municipalities, departments of transportation, and much of this demand is built in by legal requirements for these jurisdictions to salt their roads. So we'll talk a bit about the market, we'll talk a bit about the project, talk a bit about the corporate side of things, and I'll try to leave some time at the end for questions. So one of our taglines is that we are North America's first new salt mine in nearly 3 decades when we are in operations. So the first question people ask me, quite intriguing, is why has there not been a new salt mine built in North America in the last 30 years when we're in operations? The last one that was built was in 2001, brand new one. So as with any resource company, you start with the first thing, a resource itself. Now, most people probably aren't familiar with salt as a resource. It's very uninvestable to the public market because we are the only publicly traded salt development story out there. So I'll try to get this points across to you a bit. We have a shallow, high-grade, homogeneous, and thick deposit. We call this a world-class resource. Why is it world-class in our mind? Well, 2 reasons. One is the shallowness. Most of the existing mines in North America that are underground, which are many of them, tend to be very deep, about 500 to 600 meters or yards below the ground, and we would start at about 200 meters deep. This completely changes the mining methodology and technique required to access that deposit. Instead of, for a deep mine, a vertical shaft, which can take much more capital to develop and a longer period of time, we can have access to our deposit via a horizontal drift, a shallower drift, which is faster to develop and lower cost in the capital period. In the operating period, it is also lower cost. So we have a potential new mine that is shallow, that has low capital costs and low operating costs, which make this a viable project. The other element is that we are a dry mine. Our project and deposit does not sit under a lake, which many of the existing mines in North America operate under. That creates environmental liabilities and challenges and operating cost issues that they need to account for. That is something that we do not have to worry about. But that is only one half of the picture here. So we have a salt deposit that is developable. What is the other half? Well, when you're moving an industrial product, a mineral like salt, you're talking about a bulk quantity of a product that has relatively low margins. We can't put our production onto a plane like a gold bullion and just ship it off. We have to put it onto massive shipping vessels. And so proximity to your customer or an ability to get that product to your customer is a critical issue. What we have, and I'm going to jump ahead here on the slides, is proximity to a deep water port on the west coast of Newfoundland called Turf Point. This is a port that is open year-round, ice-free, operates right now, and is fully permitted and can move the 50,000-ton vessels that we would require to move to our markets. This is our market, as I mentioned earlier, and just to put it visually where we are on the west coast of Newfoundland, we can target all the key markets on the east coast of the US that get extensive amounts of snow, and then move product inland from the ports, and then we can move up and down the St. Lawrence Seaway and access into the Great Lakes region as well as of course, the Atlantic provinces. This gives us an unmatched shipping advantage compared to many of the local mines in North America that are relatively more landlocked. I'm going to jump ahead back to this slide. In addition to the critical infrastructure of the port access, we are less than 1 mile away from a tie-in to the Newfoundland Hydro Network grid, and we are less than 6 miles away from a tie-in to the Trans-Canada Highway, which is, of course, a major arterial network for moving transportation in Canada. We're also within the city limits of a town of about 1,000 people, and to the north we have another town of about 10,000 people. So we have all the elements required to build a modern mining project in this day and age, all within our backyard, already constructed and just ready for us to tap into. I will also mention, because it's probably on people's minds, the proximity to the community. We have full community support, including all Indigenous in the region that have supported this project and want it to be constructed. So that's one less risk element as well. And while I'm on this slide, I want to point out, because we are tied in to Newfoundland Hydro, we are 100% battery electric in operations, which means we will emit essentially zero greenhouse gases when we are at full production. There will be no drilling and blasting and no diesel consumption. So this is helpful when raising financing, and it's also helpful when finding customers for our product going forward, especially in the Canadian market right now, and the European market, but we expect that to be growing in the US as well. I'm going to jump back up to this slide, the main splash page slide. And now we've got a project, we've got infrastructure, we have a deposit. What's the next thing? Well, at a mining stage, we have a feasibility study. Not only that, but we have an updated study that we prepared and released late last year in October that showed very strong economics. The standout here, in addition to the close to $1 billion after-tax NPV in Canadian dollar terms, is the $188 million life of mine post-tax average annual free cash flow. So this is a cash-generating machine, and that is not just for 5 years, it's not for 10 years, it's for a 25-year mine life in reserve right now that we can demonstrate producing this cash. So think of this as a coupon-paying bond. You make an initial investment, which is the capital to build it, and then you and investors are sitting on cash flows essentially for the next 25 years. But on top of that, in resource, which is not in reserve, we have another potentially 50 years of mine life in resource. That's the nature of salt deposits. They last forever once they're built, and we'll demonstrate that later when I do some comps to valuation metrics. On top of a feasibility study being completed, we also have an environmental assessment completed on the project, released with conditions, which is normal from the Newfoundland government, to allow this project to proceed. And we have early works permits in hand that allow us to start construction on the project as well, which we are going to be starting very soon. We raised some money, a little bit of a working capital raise in October of last year, and we are starting construction operations very soon, clearing site preparation for the main capital program. The main capital program will be funded by a financing package, one major component of that we are working on with a financing group called Endeavour Financial out of London, England, that is putting together that package with debt lenders that will fund up to 60% or at least 60% of our financing needs, will allow us to advance the project going forward. The initial capital is $600 million Canadian, so it's very modest in the mining industry. And again, we have those extensive long tail free cash flow production to support that afterwards. So let's talk a bit about the salt market, because again, this is probably when many people are their first time hearing about it. Salt is a global commodity. It trades in many different regional markets, and it has many different uses. We have chosen de-icing road salt for our market because it is the largest market in our region with the lowest margins. We don't want to be talking about challenging into different markets with higher margins at this point in time, because that takes in a lot of resource and energy and effort to understand. Think about what we're trying to do here is establish a worst case baseline, which is the de-icing market, and say if we can generate a project that makes sense, which it obviously does, and is feasible in this market, some of our salt may end up in other markets, and that would just be an added benefit for investors. So view that as an opportunity. The de-icing salt market is very robust and established in the North American space. We are the largest regional de-icing market in the world, 4 times larger than the European market, for example, which would also be a substantial user of de-icing salt. It is a stable commodity. There's very little downside elasticity. Anybody who lives in the Northeast US or Ontario, Quebec is familiar with this season and last season. The weather conditions have led to salt shortages in supply that only serve to increase the price in the short and medium and long terms. And then in a particularly warm winter or softer winter, the price remains very stable. It's recession proof. It is only dependent upon the weather. With that being said, what a lot of people don't understand is that North America does not produce enough salt. And I'm talking about the Canadian and US markets as one integrated market. We do not produce enough salt for our needs, not only in the de-icing market, but across all markets. In the de-icing market specifically, we have to import up to 40% of our salt needs every year into the countries from Chile and Egypt primarily. Now, why does this make sense? North American mines are older, deeper, as I mentioned. They have higher operating costs. They are established, but that brings in things like unions and other legacy contracts that drive up costs. And many of them are under environmental pressures and concerns as well that all seek to increase the cost. They can satisfy their customers within a tight margin of distribution, but it leaves an opportunity for foreign production to come in and with low operating costs at the mine sites, but then they have to put that product onto a boat and then ship it, right? And you cannot low cost your way out of global shipping. That simply is what it is. So that creates a balance where they can supply our needs and still make money, and the local producers can also make money as well. What Atlas's salt thesis is, as I mentioned, is we are a low-cost producer on the west coast of Newfoundland, so we have logistics advantages and we have cost advantages. Our feasibility study indicates that we would be competitive on a cost basis at production and on a shipping basis with all participants in the market. This is just a sampling here of some headlines that show just exactly how tight the salt market is right now. This pressure will relieve over the spring and summer, but then, if the winter conditions are similar to this year or even more normal, then the price is still expected to go up by at least 5%. I'm not making any predictions. That's just what we would expect to see. Right now in Ontario, just last month, the spot price almost tripled overnight. And New York in December, American Rock Salt, the largest producer of salt, American salt mine, their prices went up by about 25% for commercial customers. So this is a real pressing need in the market, and it's something that we want to address. So I'm going to jump far ahead here. People are free to go through the deck at their own leisure. How do you value a salt company, right? What are the comps out there that people can point to and wrap their head around? Well, out of our feasibility study, we had some key metrics here, including EBITDA and free cash flow. It was done in Canadian terms, so 325 million Canadian, 188 million US, free cash flow. We've converted that to US dollars, and then I'll go through the comps here. Compass Minerals is the largest publicly traded salt company in North America. They are the only publicly traded salt producer in North America, and they own the largest underground salt mine in the world in Goderich, Ontario. I'll draw your attention to their EBITDA and free cash flows, 182 million US, 128 million taken from their latest yearly financials. They traded an enterprise value of 1.9 billion, so market cap plus debt, and they have about 11x EBITDA EV to EBITDA multiplier. Our EBITDA and free cash flow would be, if we were in operations today, higher than the entirety of Compass Minerals, greater than the entirety of Compass Minerals. And our enterprise value is currently about $80 million US. So there's room to grow there. In 2022, a private equity group consolidated much of the salt industry in North America and purchased the American salt assets of a German conglomerate called K&S. They paid $3.2 billion and a 13x EV to EBITDA multiplier, and they had EBITDAs that were roughly equivalent to what we would be in operations. So I'll draw your attention again to what that company went out the door for, or those assets went out the door for, and the EV multiplier on that. And just if you think this happened a few years ago, maybe the market's gone soft, just in December of last year, so less than 2 months ago, US Salt, an evaporative salt producer, but still a salt producer in the US, sold for $900 million US, and they sold at a 17x EV to EBITDA multiplier. And you can see their EBITDA would be about 4 to 5 times less than ours if we were in operations. Obviously, we need to build this mine. We need to get it into operations. That's our goal. That's our objective. But this is the gap that we see and the opportunity for investors to get in there. Now, some people may be questioning, why are people paying so much in terms of multipliers here for EV versus EBITDA? If people are familiar with the gold sector, for example, a 6 to 8x EV to EBITDA multiplier might be more realistic in a good market. Why are people paying double digits for salt? Again, it goes to the nature of who the customers are here, right? Governments, cities, municipalities, citizens at the end of the day. And that demand does not go away. And these assets can be counted on to produce cash essentially in perpetuity. So I'm going to jump ahead here to a slide that really shows, I like this slide because it shows viewers what our mine will look like in the future. And I want to draw your attention to the fact that you're not looking at an open pit. You're not looking at a waste rock pile, a tailing storage facility area, major water infrastructure. You're not looking at dams or dikes. You're not looking at heap leach pads. You're not seeing chemical usage, cyanide, sulfuric acid, diesel, explosives, none of that on this project. It is a simple process. We mine underground, we crush and size the material, we place it onto a conveyor, we take it to the port, we load it onto the boats, and then we ship it off, and that's it. We're done to the customers. Now, for the investor, why is this a time to pay attention to the project? Every stock has a history. In 2019, this stock's history was at 5 cents Canadian. During the COVID years, through a mixture of marketing and the project getting ahead of itself and COVID exuberance in the markets, as some people may remember, this stock ran to over $4 Canadian. So it gave many people over an 80 times X return. And there was a significant amount of trading that happened during those periods of time. Now, the company went into a lull after that, where it continued to advance the project, but unfortunately did very little marketing and market awareness. And the market wasn't aware of the positives that had been done on the project. The share price suffered. When I joined the project, the share price was at about 35 cents. The chart has recovered nicely. We were getting volumes up significantly. And this all follows with the Lassonde curve here, which is overlaid over the chart. And this is Artemis Gold, is a proxy company. They're not the only one that has benefited from this principle, where there's an initial run up, the market gets into the mode of waiting for the financing and all the hard work to be done, and then it's ready to advance as those elements are de-risked. We are at that stage. We are securing financing, as I mentioned. We'll have that. We expect to have that lined up in the summer. We're working on additional strategic partnerships. We're starting construction right now. There's potential for additional offtake and equity participation. And all of these things can contribute to unlocking the value in the company. And as I mentioned, I started at 35 cents. I think we're trading in the 90 cents Canadian range right now. Volumes are up significantly. So it's a good time for investors to start to take a look. Some things I want to jump ahead as well show we have less than 110 million shares outstanding. We have over 40% insider ownership, so we're very tightly held. And we have no warrants overhanging and outstanding the company to create impediment to upward price movement. And we have a clean balance sheet right now. So a tremendous amount of value in Atlas Salt on work that has already been done. And now we are at the phase of making sure the market is aware of that and lining up and de-risking the project. And that's why it's a fantastic time to be investing in it. And of course, take a look at the market, the weather conditions in the Northeast, and you can see and understand that this is a real need that we are working to solve. Okay, with that, I'm going to take a look at some of the questions here and answer them. First question, easy one, why was the deposit not developed before now? We are the first discoverers, first developers. The people associated with that are still associated with the project. It's just the nature of developing an asset like this. It was relatively discovered as a salt deposit, a viable one about 10, 20, 12 years ago, and it's just been proving it out, working through the engineering on normal resource sector timeline and development timelines since then. So that's the reason. Can you discuss your market strategy? Who are your clients, sales resources, and typical length of supply contracts? Clients are mostly going to be ultimate end users are cities, municipalities, departments of transportation, provinces, and states. These contracts are typically set for 1-year periods of time because governments like to go out to the market every year and see if they can get a better price. They always think they can. There may be other sales strategies where we distribute through an existing incumbent distribution network. That may entail a longer-lived contract to make business with them, and then they ultimately sell on a yearly contract. But that at this stage, we're in multiple discussions with offtake partners, and of course, we have to consider establishing our own distribution networks for the entirety of our salt, a portion of it, or mixes here and there. Okay. Oh, that was, sorry, somebody just was introducing themselves. What are your permitting risks as you drive to production in 2020? So actually 2030, I think you meant. How much capital will you need to raise for production? So permitting risks are very low. There's always risk, of course, even if a project and I'm not saying this would ever happen to us, but just in contrast, even if a project has a permit, there's nothing to say that a government agency or somebody could not just wake up one morning and say, you don't have that permit anymore. We'll fight you in court for the next 5 years to make sure that happens. Not saying that ever is going to happen to us, but just to emphasize that there is always permitting risk. With that being said, we have a completed environmental assessment. That environmental assessment took 2 months to complete. Not 2 years, not 2 decades, 2 months, full sign-off from the government, full letters of support from all community stakeholders. We are past community consultation. We are past all of those elements that are typically stymie and hold up a project. What that now puts us into is a procedural phase of the project development where we submit design elements and final designs and then receive final permit approvals to advance. And that is what the early works permit, for example, was. The next one will be the capital development phase. And then after that, it'll be final operating permits. And again, that's just going to be, show us your operating plan. Show us you can operate this mine safely and keep people safe and the environment safe, and yeah, that you're doing what you said you would do in the EA process. You have our approval. It's procedural, so we view this as very, very low risk. What are your key milestones for 2026? So I'll go back again to the key milestones. The biggest one is securing the debt financing package, confirming that we have a financing package for about 60% of our capital needs. This kind of addresses the last question I forgot to answer. 600 million Canadian is our financing initial capital, not all day one, over a 4-year period. We'll do a typical S-curve spend, so low to start, ramping up, and then flattening out, excuse me there. So that would, most of that's gonna come from debt. That'll be our major milestone. Starting construction is, I view as an engineer, as a very strong milestone as well. And then the other key milestones, which are not predictable, but could happen, of course, is strategic partnerships, potential for government support coming out. There's a very strong Canada strong, buy local, build up our own industries for export. North America, Canada, all of that, all those tailwinds pushing forward projects like this, we want to be a part of it. So those are also milestones that we would hope to deliver upon. What capex would be required to upgrade from road salt to table salt, and what would the pricing benefit of such a split be on an upgrade? So that is a good question. As I mentioned earlier, there is the opportunity. We are very confident that a lot of our salt will end up into other markets that are higher margin. We have fairly high purity salt. Some areas will be higher purity than others. At this stage of development, it doesn't do us any good to start splitting hairs on that, because right now we are focusing our energies on understanding, remember, the lowest margin bulk de-icing market and proving a viable project in that market. If I start to talk about 6 or 7 other different potential markets and slicing and dicing up the market, when investors or lenders come and talk to me, it's 7 times the work to understand each of those markets. It's 7 times the questions to defend. It's 7 times the effort and might marginally incrementally add 10 or 20% to our bottom line, which again, we don't need that because we have a very, very strong project right now. So we keep that as an opportunity. There's many other opportunities that we don't work into our numbers. There's other risks that we don't work into our numbers. Our base plan has to be a middle of the road approach, and that's exactly the approach we've taken. Will you be selling into the United States? Yes, there is almost assuredly a large portion of our salt will end up in the United States. The Canadian market alone is not sizable enough to absorb all of our demand. The US market is about 3 times larger than the Canadian market. But what you find is that Canadian mines sell salt to the United States, US mines sell salt to the Canadian market, and then both markets absorb salt from foreign countries, primarily Chile and Egypt, because we don't make enough salt. So it's a very integrated market, and we would be aiming to join that market. I don't see any other questions. We are approaching time. I'll leave it a little bit extra, but otherwise, thank you very much for your attention. Feel free to reach out to me anytime, very responsive to talking to new investors. Obviously, you can tell I love to talk about the story and spread the message, and I hope that you will be a part of our journey as a shareholder and a stakeholder, and one day you will see Atlas salt on your roads if you're in a key market. Okay, long-term strategy. What is the goal of the company? To stay independent or to be acquired? Our goal is always to maximize return for shareholders. At this point in time, we believe that is maximized by demonstrating a constructible project. We've put together a construction team. We didn't talk about them much. In addition to myself and my background, I have 2 very strong engineers at the senior levels who worked for clients like Newmont and Hudbay and Dumas Mining, a mining contractor. Billions of dollars of project delivery experience. They've been on the project for 2 years, so this is not relatively new. They're familiar with it, familiar with delivering large-scale projects. So our strategy is to demonstrate a fundable, financeable project. And if somebody wants to come and make an approach at us and it makes sense, then we have those discussions. We're always open for business. But you can't sit on your hands and wait for that to happen. And we're not, and that's not who we are. Because, again, if you talk to other resource companies, you often see at the senior levels geologists and finance people who are saying, we're going to build a project. It's just not believable if those are the types of people there, because they're not engineers. We are engineers, and that's our strategy right now. Okay, thank you, everybody. It was a pleasure, and hope to see you out there.